Certainly China is our second largest and fastest growing market, and our number one metric that we look at is total transaction growth, and that's the sum of transaction growth from new stores as well as comp. And this quarter we saw total transaction growth in the mid-teens. Now certainly the GDP growth has slowed a bit in China, and that does have effect on consumer spending, but we're still growing the total transactions in the mid-teens, and we're playing the long game. I know you had Joe Tsai from Alibaba, and Alibaba is one of our great partners. They are the #1 tech company in China, and our Alibaba partnership is just getting started. In fact, we launched delivery in Beijing and Shanghai at the end of September, and by the end of this calendar year, we're going to be in 2,000 stores doing delivery in partnership with Alibaba in over 30 cities. And so we continue to expand in terms of new stores, in terms of offerings for our customers, and into new cities throughout China. So I think there's probably some impact to consumer spend, but we're still driving the key operating metric that we look at, which is total transaction growth.
Kevin, a lot of people were skeptical that someone with a background from Juniper would be able to come in, a technology company, and work at one of the world's largest consumer companies. But it seems like one of the things that you've been able to do is figure out how to get people to have more customer-facing time. And this seems something that is uniquely technological. I do believe that that's mattered tremendously for your comp store sales in the United States.
Well, it did, Jim. In fact, the more we can enable our Starbucks partners to focus on the customer, the better our stores perform. And so this particular quarter, we automated inventory replenishment and tracking, and we basically were able across those stores to redeploy 1.5 hours of administrative time that our partners had to spend, and we redeployed that time to focusing on the customer. And that focus on the customer is the #1 key driver that I think differentiates us. Our ability to create the third place experience is all about how our Starbucks partners are able to create that environment, create relationships with customers, and provide them these premium handcrafted beverages. And so our ability to use technology to free up time so partners can focus on the customer was one of the key things that we saw in Q4, and we're going to continue to focus on that.
Kevin, it's employment number today, the labor department, and we get a lot of people, particularly wealthy people, who come out and say, you know what, if more people get jobs and wages go up a little bit more than 3%, it's really going to be terrible for the economy. Do you subscribe to that view?
Well, Jim, certainly unemployment is very low right now, and for us, we've got to compete in the labor market along with everyone else. But one of the things that I think really differentiates Starbucks is the fact that we certainly compensate above minimum wage, but more importantly, we have a philosophy, a principle, a set of values of taking care of our partners. And that started when we offered health care for part-time workers of 20 hours a week or more. We provide our partners with Starbucks stock. It's called Beanstalk, and that's why we call them partners. We have the College Achievement Plan with, I think, nearly 10,000 Starbucks partners now attending ASU, getting a college education. We launched Family Leave, and just this last quarter, we introduced something called Care.com to help our partners take care of instances where maybe their child or an elderly family member needs some care during the day when they have to go to work.
Okay.
Our ability to provide not only wage but benefits allows us to attract and retain partners well above any of the industry metrics, and that continues to serve us well.